Okay, so now on your screen you can see a question related to net present value. We will solve it so that you can see how to solve any question related to NPV. These are simple questions, just you have to understand the concept. Okay, so the question is asking us to convert the cash flows to present value, and we have cost of capital 6%. That means we will use 6% to discount these values. Okay, before wasting any further time, let's jump to on our Excel sheet so that we can see how to solve this question. So here we have our question. So we have years, for example, year 1, 2, 3, and 4. Just give me a second. Okay, and we have values related to it. For example, 25,000 in the initial year, then we have 6, 10, 8, 7. Fine, 6, 10, 8, and 7. So it's our question. Fine. Now to solve it, give me a second so that we can have more space. Fine. Now it's our answer. So we have to write years here first of all. Then we will simply take these values, or we can even copy and paste it simply. Fine. Now we have the discount rate here, and then we have discounted cash flows. Now we know that our discount rate is 6% in this case. Fine. Okay. In year 0, please remember this point. In year 0, the discount rate will always be 1. Okay. Now we will see what should be the discount rate of rest of the years. To see the discount rate of rest of years, we will take help from discount rate table, which will be given in the exams. Okay, so here you can see I have opened the book. You can simply find the present value table. Here we have the discount rates, right? So you can see it is starting from the year number 1. Okay, because for the year 0, the discount rate will always be 1, right? Now from here we have to choose that percentage at which we want to discount our values, and in this case we have 6%. Fine. Now I need it till year 4, so I will simply copy it from here and I will paste it here. Again I will do it for the rest of the years. Copy, paste. Again copy and paste. Then again copy and paste. Now I have to multiply it with this value. Just give me a second. I am applying this formula to the rest of the values. Now I will sum up them, and here is our answer. It is the NPV, or the present value of these cash flows. And here you can see the NPV is in positive, so we can go with this project. We can also say that this project is covering this 6% and then giving us a surplus of 1822, so it's profitable. It was a very straightforward and simple question. We did nothing, we just sum up these values after discounting them. Fine. Okay, now we have another question which is similar to the previous one, and it is your assignment for home. In case you have any trouble in attempting this question, you can ask me. Anyhow, it is similar to the previous example we just solved. Now here we have some advantages and disadvantages related to NPV. As we discussed that it lead to the maximization of shareholders wealth, okay, and it consider the whole life of project instead of, as we saw in payback period, it only consider that time at which the investment can pay back, right? And after it ignores the rest of the cash flows after that period. But in this case, in the case of NPV, it consider the whole life of project. Again, it is based on cash flows, not on profits, which is a better strategy. We have already discussed these things during our previous lectures. Then we have, it's an absolute measure of return, and it gives the time value of money. It considers the time value of money, so it's the better approach. And here you can see that theoretically NPV method is considered to be superior than the other investment appraisal methods, and the disadvantages are not that much as compared to advantages. Like, then it is difficult to explain managers because it's something, it involves some complex calculation. But anyhow, the advantages of using NPV is more than its disadvantages.